As China embarks on a new journey of modernization, the National People's Congress, China's top legislature, and the Chinese People's Political Consultative Conference, the top political advisory body, convene their annual sessions in early March. Join us on CGTN for our special coverage of the two sessions. Find out the course China will take to ensure a sustainable future for its 1.4 billion people, and how China's decisions will impact global economic recovery. Agenda for 1.4 billion on CGTN.
Hello and welcome to this special coverage of China's Two Sessions 2023. I'm Lily Lu in Beijing. This year's Two Sessions will begin in a few days and will complete top leadership transition and new stimulus to support economic recovery. GDP growth target for 2023 and other economic targets will be announced. Key economic topics at the sessions will include not only the short-term issues like monetary and fiscal policies that can rebuild market confidence, the repositioning of the role of the real estate sector, etc., but also a number of long-term issues such as an aging society, urbanization, and Chinese modernization. And in today's episode of Two Sessions 2023, What to Watch, we have invited renowned analysts and academics to share their prospects of China's growth path and ideas on how the country should do to improve its business environment for overseas investors as well as private businesses. So let me introduce our guest. Joining me now is Mr. Zhu Xian, Vice President and Secretary General of the IFF, former Vice President of the World Bank and former Vice President of the NDB. Welcome to the show, Mr. Zhu Xian. And Mr. Zhu Haibin, Managing Director, Chief China Economist, and Head of Greater China Economic Research, JP Morgan. Welcome on the show, as always, Haibin. And Mr. Tang Yao, Associate Professor of Economics, Guanghua School of Management of Peking University. Thank you so much, gentlemen, for joining us.
Thank
you.
Let's
start with China's two sessions, and what do we expect out of the two sessions this year? Well, I guess the first question would be that everyone is asking, and let me start with Mr. Zhu Haibin. What do you think will be China's 2023 priorities in terms of economy and trade?
Yeah, so I think for this year, the economic growth is priority growth, priority policy objective. Last year, Chinese government set the growth target 5.5%, but because of the COVID disruption, we only get 3%. So I think for this year, achieving a reasonable high growth, restoring the economy to a medium to high growth rate, that is the number one priority. As actually we see from the Central Economic Working Conference, growth is a priority task. So God, that the numerical target is worth watching, closely watched by the market participants. We believe that above 5% is this year's growth target. But I think the sentiment has been improving on China's economic outlook in the last 3 or 4 months. If you asked me 3 months ago, I would say 5% is a challenging task. We recommend 5% because we want to tell the market that Chinese government still care about the growth, care about the developments. But 3 months after, I would say the biggest positive development is that China successfully weathered through the COVID restriction and economy start to reopen. So market actually has been turning much more positive on economic outlook. And at this moment, I would say 5% is probably perceived as a minimum growth target for this year.
All right, so that would be your estimation of China's economic growth. Let me go to Mr. Zhu Xian. What do you think need to be the economic priorities for this year for China, policy-wise?
I think that as a policy indicates, I think we do not only need high growth, we also need quality growth. Mm-hmm. That also means how that eventually the business levels, you can enhance the productivity, resilience, and also providing good quality services and goods to the consumers. So I think that that's probably the other side of increasing importance we need to attach so that eventually the growth will have some sort of material benefits to the population, to the consumers, and eventually to strengthen the government capability to serve the economy.
No, great. And we're going to start with that and we'll get more details from you later on the show. But for now, let me go to Mr. Tang Yao. What do you think that China needs to prioritize in order to achieve high quality growth?
Yes, so the government and the public sector have been doing a lot of heavy lifting in the past 3 years, and now is a good time to promote organic growth in the private sector, especially the small and medium enterprises. And this will bring back consumption and employment, and this will stabilize the Chinese economy in the context of a rather uncertain international economic environment. So I would think that the growth of the small and medium enterprises will be very critical for this year's economic targets.
All right, thank you. And Haibin, what do you think are some of the formidable headwinds that China is facing that could be jeopardizing economic development in China?
Yeah, I think for this year, the external environment is pretty challenging. We know that most advanced economy, they're facing high inflation and the central bank has been tightening, and the financial market condition tightening has been leading to economic slowdown. So in the US, Euro area market has been talking about recession risk. So that means that for the external side, that the global final demand is softening. That will pose a lot of challenge for Chinese exports. So without external lifts, when you talk about the growth, high quality growth, all the pressure on the domestic fronts. And I think on domestic front, the key challenge is that how to balance between the economic transformation process, particularly how to balance between developing the new sector, but at the same time actually moving away from the old growth engine. And how balance between the two actually is very tricky. And if you look at the last several years, I'll say on some areas, the policy tightening probably leading to excessive, I'll say, tightening, for example, in the property market, and that has been increasing the vulnerability in the economy. And the good news is that since November, we already see some policy adjustments, and in the housing market, we see a lot of the policy relaxation trying to control the downside risk. So I think that that's very important. Another good example, like in the decarbonization in 2021, at the initial stage, I think excessive delivery leading to a lot of trouble. But later on, actually, the policy is becoming more pragmatic. So from that perspective, I would say finding a pragmatic policy implementation, that is a key on the domestic policy.
Mr. Zhu Xian, if we talk about China's role in the global economy, what do you think are some of the external risks that we need to bear in mind in 2023 for China to maintain steady economic growth? Mr. Zhu Xian. All right, I think we'll get back to Mr. Zhu Xian in just a bit, maybe a bit of technical glitch. Okay, here you are. Did you hear what I was asking, Mr. Zhu Xian? Sure.
Yes.
Okay, go ahead.
I think as Mr. Zhu Haibin made an important point, I think Chinese economy is facing externally quite challenging situation. I think that eventually, I think that China's economy proved to be quite resilient. The point is how eventually the Chinese economy can prove more resilient and competitive, and eventually also keep its commitment to open up rather than that internally find that the way out, but that will not be sustainable.
Okay, thank you very much. And Mr. Tang Yao, let's follow up a little bit on that. Do you think that we might see a large fiscal stimulus package in China, and what more bold measures do you think is needed to expand domestic demand?
Right. So I totally agree with the two Mr. Zhu's that we need to take a balanced approach to the economic policy making this year. And personally, I would not expect a large deficit package or another stimulus this year, because we have had some pretty, successful passage from the COVID easing. So we likely to see pretty robust rebound in the consumption, especially the service sector. So I suspect the policymaker will probably draw some contingency plan and wait to see how the rebound is going on in the first half of the year, and and wholesome ammunition available if the government need to step in the second half of the year. So I would not expect to see a larger fiscal stimulus announced during the two sessions.
All right, Haibin, what do you think that multinational companies expect out of these sessions? I mean, we are seeing a slew of multinational CEOs planning out their visits to China, this spring. They're lining up to come. We have the China Development Forum in just a few weeks, and we're going to see a number of them coming in then. What do you think they're looking at, they're watching out for from the two sessions?
Yeah, I think that three things they are paying close attention. Of course, number one is the numerical targets, the growth target, but also the policy target. That's actually every year in March, the multinational company has been watching out. Second, for this time, of course, is unique, actually, the leadership rotation, particularly the economic team, from premier to all the key minister position. Actually, we have a complete new team. So, of course, at the multinational company management, they're also curious to see the new faces. And of course, on the third thing they're watching is that what's the new economic thinking, their policy or economic agenda going forward, how Chinese government will further push forward the reform and openness policy. I think this is also very, very interesting. So many actually senior investors telling me that they're also watching for the press conference to be held by the new Prime Minister of the MPC meeting.
All right, Mr. Zhu Xian, you're based in the States. What have you been hearing possibly from either academics or business communities there? What are they expecting out of China's growth target this year? And also, if we look at China's role in the region, what do you think the two sessions or China's economic growth really mean for the Asia-Pacific region, Mr. Zhu Xian?
I think that China is the largest economy in the Asia and Pacific region, so playing quite important role. From perspective of the rest of the region, I think that they probably expect if China can have a stronger growth and also through the trade arrangement and other things open up, and then that they will benefit from China's growth. And also you can see that the reallocation of investment from first advanced economies in the past to countries like China, but now probably China also allocate some of the investment into the rest of East Asia and the Pacific. That probably also is the pronounced, benefits to the region. So I would say that based on the growth and investment, the trade and other connections that can benefit the rest of the region considerably.
All right. So, and I guess we all agree that one of the priorities to restore consumer confidence in China. Haibin, what do you think are the good ways to do so?
Yeah, I think that for this year that when we talk about the domestic, that the consumption is still the most important. How to encourage the recurring domestic demand. So, of course, there's a lot of room actually fiscal policy can do. I agree with the Professor Tang that we do not expect the big stimulus package, because reopening it by itself is the biggest stimulus for this year, and followed by the pragmatic industry policy adjustment. So I think that is sufficient, that and fiscal and monetary policy will be more accommodated than in a normal year, but we do not expect it to be more stimulus compared to last year. Probably actually some consolidation on that front. But I think for consumption, because household balance sheet has been quite severe damage in the last 1 or 2 years. So from that perspective, I would say some direct consumption stimulus package is still desirable.
Well, Haibin, let's be a bit more specific on that question. What do you think is the right path to recovery for the retail sector?
So, yeah, for the retail sector, we are expecting that the consumption will contributing about 4 percentage points to the GDP growth. And that means that the consumption will be a normalization year, because before pandemic outbreak, our consumption contribution, it was exactly 4 percentage points. So we do not expect actually a revenge type consumption rebound like we saw in many other countries, because number one, we believe that the government support for the consumption will be relatively limited. And the second, we believe that excess saving will play a key role, but excess saving is quite unevenly distributed across different households. And in that case, actually, the retail sale rebound tend to be K-shaped. In that the high income, the family, actually their consumption rebound is much stronger and much earlier. But for average Chinese families, their consumption activity normalization or recovery will only move along with the macroeconomic condition improvement.
All right, thank you. Mr. Tang Yao, can I get your take on that same question? What can be done to restore consumption and also specifically the retail sector?
Right. So I think that we should put in more effort to promote the consumption, especially on services, travel by the families with higher income, because we have seen that their consumption has rebounded much faster, but there seem to be supply constraints. For instance, hotel rooms or restaurants being filled up in some popular places. So indicating that the more can be done to increase the supply to meet the demand, and we could then wait to see the sort of trickle down effect, because the travel and spending of these households would bring up the income of people in many places in the country, and so this would lead to a all-around rebound in consumption. And if you look into the data in 2020, so when the first wave of pandemic hit, the consumption growth dropped much further than the growth in the income, and it took a whole year for the growth in consumption to catch up with the income. So if that's anything to guide our expectation this year, we probably will see the consumption going back to the speed of the GDP growth, or even hopefully slightly above by the second half of the year. So but in this half year, it's important to unlock the potential of the families that are better positioned in terms of their balance sheets. Yeah.
Oh, great stuff. And Mr. Tang Yao, let me stay with you for a while. Let's touch upon another issue that is about labor supply. What kind of reforms do you think is needed to increase labor supply? That is very important, and people need to have jobs to get paid in order to buy stuff. And also, what can we do to create more jobs to unleash China's full growth potential?
Right. So in terms of labor supply, we are seeing certain structural mismatch between the supply and demand. So on one hand, there are graduates from college who are competing to land public sector or other stable jobs. On the other hand, there are positions left unfilled for different reasons. So right now it's important to first to make the employment arrangement more flexible, so people don't feel like if they take on a temporary position, they are stuck right in a low pay track, and they can move out down the road. So more needs to be done in terms of training and putting people through the transition in their career. And secondly, is, as I mentioned before, it's very important to grow the service sector, especially the small medium size enterprises, because those say restaurants or small businesses in service, they are very labor intensive. They will hire many people. So that's the biggest source for employment in the next couple of quarters. Yeah. So thank you.
Great stuff. And let me get to Mr. Zhu Xian. Actually, the last question I asked you about was about China's economic growth and its relationship to the region. Let me get back to that, and hope you would elaborate a bit more on actually how to strengthen the connections within and also beyond the region to drive new resources to the region.
Well, I think that the connections probably can be seen both in terms of the hardwares, such as the infrastructure, trade facilities, and also somehow the softwares in terms of the overall enabling environment for trade, investment, so on and so forth. I think eventually, I think that the connections should benefit the growth of each of the countries in the region based on their own comparative advantage, based on their own potential in economic growth and prosperity. So in that sense, I think that given the fact that a lot of countries in the region probably they're still at a relatively low income status, I think that China probably can also lead by investing into these countries and also try to see how it can help them developing infrastructure and also share with them the experiences of getting that the investment mode right, and also based on their comparative advantage, enhancing the employment policies so that eventually a large part of the population can benefit from such opportunities.
Mr. Zhu Xian, you talked about China's efforts in initiating a number of key projects like the infrastructure-centered, for instance, the Belt and Road Initiative, and then we are also joining the RCEP, which is very important, the world's largest free trade agreement. What more can China do now to promote regional cooperation?
Well, I think that there are many ways you can promote that the trade and the investment in the region. But important thing is eventually you have a sort of common ground, or rather a policy framework. So eventually every member of the region should have a win-win situation mentality, not a zero sum. And also for now, I think that one important factor is how that eventually we can try to reduce the influence of geopolitical situations, because the market fundamentals probably can get people together. Meanwhile, somehow the geopolitical forces can divide. So I think that for the regional integration, for the regional cooperation, the political factors probably have been increasing, which I think that we should all safeguard against.
Great stuff. So going out and then also taking in, Haibin, how do you think that China can maintain its attractiveness to foreign direct investment?
Yeah, China has been a major the FDI recipient countries, but in 2022 we do see observe significant headwinds based on the balance payment data released by SAFE very recently. For 2022, China's FDI declined by more than 40%, from 330 billion US dollar to 109. Net FDI declined even more by nearly 85% to only like 32 billion. So I think that, of course, that largely was attributed to the COVID restriction, lack of communication, lack of the interaction between China and the rest of the world. So with the reopening, we believe actually a lot of headwind will be removed for this year. But in addition to that, I think that like Mr. Zhu Xian just said, actually China should seek for higher level openness. We should, like the government has been saying that China is trying to join CPTPP, the EPA, these high level, the trade pact. In addition to, of course, China also joined the RCEP. So I think that by joining these, the regional or the international trade pacts, making sure that we promote the trade and investment on the common ground, and that's actually very important. And the other thing, of course, on the domestic front, we making sure that the market enhancing the market openness, particularly in the service sector, and also making sure that the national treatment, equal treatment between Chinese companies and the foreign company, that's always a pursuit achieved by a request from the multinational companies.
All right, great stuff. And Mr. Tang Yao, anything that you want to add on top of that?
Right. So we probably can recall how China got its way to the WTO in the 1990s. There was also a lot of headwind in terms of negotiating with the United States and other countries. But what China did back then wasn't to be disheartened by the setbacks. Rather, China actually adopt policies to move it closer to the requirement of WTO without the prompting of other countries. So this would send a very clear signal to the outside world that we indeed serious about opening up our economy. So, you know, in this year and in the next couple of years, we probably could consider the same strategy. We could voluntarily move closer to some of the requirements, the critical requirements of the CPTPP and so on. So this would indicate to the outside world indeed that we are welcoming FDIs of different shades. Yeah.
Yeah, so we know that China wants to secure economic recovery and in the meantime to promote a balanced and green and more inclusive growth. So, Ms. Tang Yao, so we might need some policy and structural reforms and adjustments, and that also include policies and reforms in attracting foreign direct investment. What would be your take on that front?
Right. So in terms of foreign direct investment, we have seen shifting structure because more FDI is going into service sector and more of that is going into the high tech sector. That's tapping on the human resources, especially skilled engineers and R&D workers in China. And so we should, talk to the executives and see what they really intend to do in China, right? So how can we better match the different cities, locations with their demand? For instance, like places in Chengdu, the living environment is great and food is great, and this may become a very viable R&D hub, right? Especially with 2 airports now operating in the city. So, basically we need to look into first the trends of FDI into China, try to understand what they are after here, and second, we being a big country, we try to accommodate them through setting up different policies, presumably different places, right? So this would allow us to accommodate different pursuits of foreign firms. Yeah.
Great. So we need mutual understanding, in this way, so that we understand what they want to get out of their investment in China, and also they should, get a better understanding of which path China is choosing, and so that their blueprint can better fit China's view. And in the meantime, a great business environment is not only just for foreign investors. China needs to have a great environment to further unleash the potential of its massive private sector and individual businesses. So Haibin, the private sector is really an engine for growth here. What do you think the role of the private sector in the development of China's economy going forward? Is it going to be playing a bigger role?
Yeah, I would say the very good and accurate summary of the role of the private sector in China by the Deputy Vice Premier Liu He and other senior leaders, the so-called 5, 6, 7, 8, 9, right? The 50% the taxation, 60% GDP, 70% innovations, 80% of employment, and 90% of number of enterprises. So they're definitely, I would say, critical for Chinese economy and also critical for the social economic stability. Now, I think at the highest level, actually, ensure the equal treatment between SOE and non-SOE. They're both a critical component in Chinese economy. I think that came from the very top. Right? So I think that's very important. But in reality, I think that the private companies, they are facing a bigger challenge, particularly in the economic downturn we observe in recent years. Let me give you the number. In 2022, for example, if you compare the investment activity, private investment only increased 1% last year. The public investment increased 10%. So we clearly see the divergence. In terms of industry profits, private companies, actually industry profit declined by 7% last year. The SOE companies industry profit increased by 3%. So I think that's the current situation we're facing. And when we talk about economic recovery, the government-led public investment has been playing a key role in the current situation. But I think the big problem is that private investment still remain weak. So going forward, I would say in the next 1 or 2 quarters, how to incentivize the private sector to invest and also to consume. That's very critical for this year's growth stabilization.
I agree. So, Mr. Tang Yao, let me go to you. I would like to get your take on that, and how do you think we can better support the private sector? I mean, we have 114 million registered individual businesses in China. What more can we do to help those businesses to become stronger and bigger?
Right, so that's perhaps one of the most important questions faced by the Chinese economy. And as Mr. Zhu Haibin rightly pointed out, last year the performance has been quite, different compared to the SOEs. And so moving forward, the government has identified, the cost of inputs need to be held in check to support these private enterprises. For instance, there's the national policy to lower the cost of financing. And besides that, of course, more funding need to go to the private sector. Mr. Zhu mentioned the 5, 6, 7, 8, and 9. There's a hidden 4. So the private enterprises only use about 40% of all the bank loans in China, even though they contribute to a much larger share of output and employment. So there's much to be done. Of course, continue to lower the cost of doing business. And as in the case of last year, the government have been trying to control the cost of energy and food. So this would help to stabilize the environment faced by these private enterprises. Now, of course, this year the new challenge is international environment. So from what I gather from the private enterprises, they are very sensitive to the contraction or the slowdown in the foreign demand. So that's why they are extremely cautious in terms of adding investment. So policies such as subsidies on interest expenses, right, could help them, because that would make the projects more attractive compared to what otherwise it will be. So in terms of fiscal policy, perhaps the subsidies on the expenditure on the loans, right, could play a bigger role. So these are some of my thoughts. Thank you.
Thank you. Mr. Zhu Xian, I would like to get your take on that. What could be the potential risks or hurdles for small businesses and private sector development in China that comes from the external environment, and also based on your observations of what other major economies are doing to promote their own private sector? What are maybe some of the things, a few takeaways that China can get?
Well, I think that this is the most important for probably all the economies, how eventually you can promote the private sector development, enhancing their viabilities. I think there are different ways of doing so. I think that fundamentally, one way is, as we see, you try to address their specific concerns, giving their supportive policies and etc. The other, I think, more fundamentally, you provide a good policy framework which is predictable, transparent, and also, to the extent possible, neutral. I think that over the past 3 decades, Chinese economy was very successful providing stable environment. Meanwhile, at the local government, at the level, at least try to address specific concern. I think now is the time that eventually we try to improve the policy framework. So fundamentally, if that entrepreneurs know that what they are facing will be stable, predictable, and transparent environment, that manage well largely their expectation. I think that probably also something the policymakers at different level of government should think of.
Great stuff. Thank you very much. And now let's move on to another topic that I've always wanted to discuss. That is supply chain issues. Supply chains across the globe faced some major disruptions during the pandemic. Now things are getting back better, but externally, the global economy is walking into recession as being predicted. Inflation is high, external weak demand, as well as geopolitical tensions. So we are seeing a lot of uncertainty in supply chains. So let's focus on Asia's supply chains. Let me stay with Mr. Zhu Xian for a while. What would be your overview of the shifting supply chain landscape in the region?
Well, I think that probably over the past 1 or 2 decades, you can see the 3 important the trade investment blocks, including the supply chain. One is North America, the other is Europe. Then I think the last but not least is Asia. Asia probably you can see large economies such as China, Japan, South Korea, and other more advanced economies. And then you can also see the rest of the region, like say East, South the region, etc., etc. You can see based on comparative advantage, I think that the market forces eventually have led to that sort of supply chain formulations. So this is largely, I think, that the market forces. I think that the issue now is how eventually we can see from China's perspective, and you can go to the next ladder of economic development, developing more technologies and the capital-intensive industries. Meanwhile, I think that gradually and shifting away from labor-intensive industries, that can be the benefits of other economies. Recently, a lot of talk about the exit of the investment from China. I think we need a deep analysis. I think that sooner or later, you can see labor-intensive industries in China probably may lose its comparative advantage. Meanwhile, that these are still the industries that can benefit the population of the less developed countries in the region. On the other hand, how can you have a win-win situation? Meanwhile, China can go to the next ladder. Meanwhile, that letting others do the things that China used to do. I think that in that sense, I think that probably we have a win-win situation in terms of supply chain. But on the other hand, as you rightly said, how we can really try to fight against the geopolitical and the tensions and the decoupling and et cetera, et cetera. That probably, I think, fundamentally, we need to call on the fundamental market forces rather than to see the political interferences.
Great points there, Haibin. What do you have to say on top of that?
Yeah, I want to make three quick comments. One is that, in the last 10 years, China is a dominant, actually, the manufacturing hub in the world, the dominant actually, link in the global supply chain. But as Mr. Zhu Xian said, actually, the global supply chain, actually, the shift is quite a natural part. For some of them, actually, like the labor-intensive components, like textile, the toys, and the labor-intensive sector. In the last 10 years, we already see the shift moving away from China to other low-cost Asian economies. The second point I want to make is that I think the recent the geopolitical tension, or particularly the U.S.-China, the strategic competition and the technology decoupling trend between China and U.S., I think that is posing a new challenge, particularly obviously after the Ukraine war. We see the trend, actually, the fragmentation of globalization. Instead of seeking for efficiency, many countries now talking about resilience and also friendshoring. So I think that is the trend we should be wary of, and the risk, of course, is negative for China. And the third one is that even despite this geopolitical tension and also the fragmentation in globalization, we still believe that China will remain very important the part in the global supply chain. Probably not as dominant as in the past, but if you look at the middle class value added, the machinery, electric equipment, China still is very competitive. And even in some of the new sector, for example, new energy, in China, that China's solar panel accounted for 80% of global supply. New energy vehicle, China has the 60% global share. So I think even though that the geopolitical tension may actually lead for more difficulty, and probably China will no longer be as dominant as the past, but it's also not easy, as Mr. Zhu Xian said, actually, it's still, finally, it's the economic linkage and also trades, the largest still prevail.
On top of that, Haibin, what do you think are the key weakness or bottlenecks of China's supply chain?
Yeah, I think the biggest challenge is the technology, the restriction from the U.S. and also the impact of the rising the geopolitical tension. That actually is posing a big problem. And of course, that on the China's own perspective, that like I said, the production cost has been increasing. So for some industries, actually, we should not be panicked. It's actually the supply chain moving outside China is just a natural part. And we also see that Chinese companies, not only multinational companies moving outside China, but also Chinese companies are moving factory to the low-cost countries. But I think what we should pay attention is that for those sectors, we still want to develop, and we still are gaining share. I think we should try our best to keep this the capacity still within China.
Mr. Tang Yao, how do you think China can strengthen its supply chain advantages?
Right. So I believe, at this stage we have to be realistic and recognize that not all countries welcome the Chinese perspective of international economic community. In this context, we should perhaps prioritize the relation with the ASEAN economies, right? Because there's a great degree of a complementarity because they have a younger population and the labor cost is lower. So naturally, as the two Mr. Zhu has mentioned, there's a lot of win-win situation to be discovered there. And of course, we in ideal world, we would like to get a global deal in sorting out the new global governance over economic and financial affairs, but that's probably not going to happen. So what we can aim for is to develop a successful region, including East and Southeastern Asian economies, right? And this would demonstrate to the wider world that the cooperation would still be very profitable for all countries and economies involved, right? So through that cooperation, we actually would make the region more robust in terms of supply chain, and also hopefully we can convince more countries to join this approach of cooperative relation in the global economy. Yeah.
Well, Mr. Zhu Xian, we talked about the changes and the shifting trends in supply chain. How do you think these changes would impact or affect intra-regional economic linkages?
Well, I think that market forces is most important driving all the changes. Of course, increasingly over the past years, you can also see the geopolitical tensions, other things. I think that from China's perspective, we're in a unique position because the largest probably size of economy in the region. So eventually, I think that under the sort of just under implementation, the RCEP, I think that there are a lot of potentials that we can develop with the rest of the countries under this trade arrangement, so that eventually we can see that the more closer link integrations. On the other hand, I think China has a lot of experience in developing infrastructure, particularly on connectivities and the transport. If these things can be further developed, you can see this country probably economically more attractive and to the regional or interregional cooperations rather than try to do things with others. So I think there's a lot of potential. The issue is how we can translate what we're committed to into the actions against the sort of external influences, particularly the geopolitical tensions.
All right, Tang Yao, do you agree that those changes in supply chain could actually help to strengthen regional cooperation, and there are opportunities there?
Yes, I totally agree because the the migration of industries through different countries and regions just has been a very robust observation over the past few centuries, and so that economic force is something that we all have to recognize. And so in this context, right, we should try to make it work for more countries, make the migration of industries more inclusive, right, and to benefit more peoples in the world. And so there's still a lot of room to develop this mutually beneficial relation, and still we still can gain many friends in this process.
Oh, great. And also, I would like to get your comment on that, Tang Yao. How do you think will rate hikes by central banks, especially by the Fed, affect the economic growth of the region?
Right. So my personal take is that the rate hike is driven by the structural inflation in the United States because after the easing of the pandemic control, that people are switching back from consuming merchandises to services. And at the same time, the supply in the service sector is hit by the change in the preference of service sector workers. So this led to sustained inflation pressure. So in order to bring it down, the Fed has to hike the rate to dampen the demand in the service sector. But this, I think, mostly will be felt in the service sector in the United States. But for the Asian economies, it would mean that the sort of weakening demand for merchandises will remain so in the next 1 or 2 years, right? And on the top of that, a tight financial environment associated with the rate hikes, of course, will be painful to some countries that rely more on external finances. So that I think that you will see a double squeeze in terms of both weaker external demand and also tighter financial environment. But perhaps we have already seen most of that effect on the ground. Of course, that said, right? So that the downside is that this same pressure will probably remain there for another year or so. Yeah. So we just probably have to be patient and reckon with that with policies in the next year or so.
Okay, so Haibin, do you agree that those rate hikes will continue? I mean, they're going to continue for possibly into throughout a year. Is that going to be a continued risk or pressure on regional development? And also, what is your comment on the issue of rising debts? I mean, that really is that going to actually slow down economic growth?
Yeah, so I think that first to follow the discussion, I think despite the rate hike and of course that the U.S. economy is slowing down, but from that perspective, that's also provide a good perspective because China is offsetting from global perspective, providing a unique or independent growth driver, and that has a very important to think about China's relationship with the world, right? Because not only actually in the last 10-15 years, China has been contributing to the GDP growth, but also actually is an independent growth driver. And China's domestic market is huge. China also have a very comprehensive manufacturing sector, and also the labor surplus has gradually shifting into engineering dividends. So these are the strengths of for China actually to maintain the good trade and the economic relationship with the rest of the world, particularly in Asia. Now, on your second question, that the rising debt problem, yeah, this is a long time topic for China, particularly after the 2008, the 4 trillion stimulus package. Of course, one fact is that China's debt has been increasing quite rapidly in the last 15 years. In 2008, based on our estimate, China's debt over GDP ratio was 140% GDP. Right now is slightly over 280, so almost doubled in the last 15 years. But it's not increasing every year. Actually, in the last 15 years, there's certain periods China's debt either pause or delever. For example, 2011, 2017 to 2019, and also 2021. The last year, China's debt over GDP ratio increased by about 10% of GDP last year. So that's kind of some basic facts based on our analysis. Now, will high debt naturally leading to a slower growth? I think, of course, that we should avoid too rapid increase in the debt level, because based on the global experience, like the research done by some international organization, I think the pace of the debt increase, usually if the pace is too fast, it will naturally lead to a financial crisis or debt crisis. So we should avoid that scenario. But high debt level itself is not necessarily a doomed phenomenon, because it truly depends on the asset side, whether it's good debt or it's bad debt, right? This is a typical debate. So if the debt increase is mainly to finance some productive assets, I think this is what I call the good debt. We shouldn't worry too much about that. In China's discussion, I think the one fact we should be aware that is that the investment return has been gradually declining in the last 10-15 years. That's why the problem getting more and more attention, right? So I think that on the policy side, that probably we should not spend too much time talking about debt level, but we should talk more about, say, how to improve the investment efficiency, right? How to put the discipline on the local government or LGFV entity, local government financing vehicle, making sure that the money is spent in a smart way, is actually to support economic transformation in our big agenda.
Great point on that. Thank you very much. And my final question to you, gentlemen, is that which section of the 2 sessions, let's say which meetings or which topics, which areas, those proposals of different sectors, which ones would be your personal, mostly watched sections? You know, like which one would be on your radar, on top of your radar? Can I start with Haibin?
Yeah, I'll probably pay attention to two things. Of course, the day one, the government work reports and all the numerical targets, and the last day, the press conference by the new prime minister.
All right, and Mr. Zhu Xian.
Well, I think there are many interesting things I'm watching over the two sessions. But I think the most important to me in economic terms, and eventually how government's commitment on the marketization of the economy will go on, or rather there are any other sort of constraints eventually we need to identify. So I think that all over in the world, people are watching whether China is committed and to continue its open up and the marketization.
Oh, great. And finally, Tang Yao.
Yes. So sort of pick up from Mr. Zhu Haibin's point. So because people talk about high debt, but then really if you make the right investment, you have high growth, then you can grow out of the debt problem. So the key issue is really there are substantial new policies to release the vitality of the private sector, right? So this will be very critical because in the end, the entrepreneurs have the money on the line. So if they make the right investments, and then this would make good return and will be bringing growth and employment, right? So this would be the most important, set of policies to look at, right? So more or less concurring Mr. Zhu Xian's point that the market, right, reform, the deepening market reform is very critical. Yeah.
Oh, great stuff. Thank you so much, gentlemen. That was a very productive session that we had today, and we're all going to be closely watching what will be said during the two sessions in, let's say, just 2 days. And thank you so much, and I hope we have more chance to talk about China's economic growth recovery packages, and also a lot more on that, and when the two sessions, convenes, and hopefully we'll get more chances to talk online or maybe offline. Thank you so much. And with that, I'm wrapping up this special coverage on China's two sessions 2023 What to Watch. Joining us then was Mr. Zhu Xian, Vice President and Secretary General of the IFF, Mr. Zhu Haibin, Managing Director, Chief China Economist of J.P. Morgan, and Mr. Tang Yao, Associate Professor of Economics from Guanghua School of Management, Peking University. Well, I'm Lily Lu in Beijing. Till next time, bye for now.